The USD Japanese yen is at a level that's very interesting. In particular, it's just below a daily sellers level, probably more importantly, below a monthly sellers level. Back in January of this past year, price did break down but found buyers at the monthly buyers level. And it's moved up ever since. We're talking on the close to 2,000 pips, if my math is right. And so what I'm anticipating is potentially, according to the charts, is now a pullback, a drastic pullback, where we see a move that can get to at least this 13 simple moving average. So, 800 pip move potentially. Now, what's nice is when the fundamentals are aligned with the technicals. Right now, the technicals are stating or suggesting that you short price at these levels. But however, you want to look for a reversal pattern on a smaller time frame. Let's get into this article that discusses the somewhat of the fundamentals. This is fxstreet.com. USD JPY retreats from the 145 level year-to-date highs as Japanese authorities signal intervention. So this is key now. This is very key. And we've seen this, I think, early this year when the Japanese yen intervened. We saw the yen rise against the G7 currencies. All right. So the US dollar remains pressured by, this is from last week, pressured by an inflation report released by the Department of Commerce. The U.S. Fed Reserve preferred gauge for inflation, the core PCE, eased from highs around 4.7% year over year to 4.6% in May, while headline PCE decelerated at a faster pace, with monthly data slowing to 0.1% from the 0.4% in April, and annually based numbers at 3.8% from 4.4%. So the Fed's job of increasing interest rates to put a ceiling on inflation is working after 12 or so months. Other data witnessed the Chicago PMI improved to 41.5%, but remaining in contractionary territory. So anything over 50% would be expansion. Then you also have the University of Michigan revealed June's latest poll, consumer sentiment hitting 64.4 threshold above the preliminary readings of 63.9%. So this states to me that the consumer is still strong. This consumer is responsible for 2/3 of GDP. Now, on the Japanese front, you have the Tokyo Core CPI, a critical inflation gauge, edged higher in June, with the index coming in at 3.2% year over year, up from the 3.1% in May. Even though CPI stood higher than the Bank of Japan's 2% target for the 13th month, the Bank of Japan remains committed to keeping its ultra-loose monetary policy stance. So this ultra-loose monetary policy stance is the reason why the yen has lagged all other G7 currencies. And it's the reason why you see a massive increase in the USD Japanese yen. But like I said, technicals are saying that a reversal is imminent. All right, given the backdrop that USD JPY was set to continue to rally, still Japanese Finance Minister Suzuki's comments that Tokyo would respond appropriately if the moves become excessive capped the USD JPY advancement. All right, so let's go back to the charts, and it's early in July, just 3 trading days. You can see a doji candle forming on the monthly chart. Again, it's still young, but price is at a daily sellers level at 146. If we go to the weekly chart, before we get to the daily chart, we can see this massive up move. So one confirmation to get short is price breaching the weekly uptrend line. That would be one form of a confirmation to get short. All right. Otherwise, prices can continue to move higher to find that higher level of liquidity where sellers are at. Now, if I also look at the weekly chart, I can see a rally in price, 3 basing candles, and then this huge massive drop, right? So potentially liquidity is going to be in further up, potentially here. Okay, so now let's go down to the daily chart, and what we can see is price continues to respect the majority of the moving averages. Another confirmation would be is a break, a firm break of these moving averages, and the moving average is starting to turn over and to the downside. All right, so the reason why we have a daily sellers level at 146 is this beautiful massive drop in price after price dropped, basing candle, and then a huge drop. All right, so I had marked off this area above the daily sellers level. Just looking forward to see if there's any signs of liquidity, and I don't really see any. Let's drill down to the 8-hour chart. Again, not really seeing any levels of interest. You had one here, but you never got a break below this pivot low, which is why price came back to pick up any remaining unfilled sell orders before moving further down. All right, we're going to go to, all right, you see this candle here on massive volume. So I'm going to shorten that up. All right, so you have two levels of liquidity. First one is the daily sellers level at 146, and then you have this, say, 151. And this had to be on news. I'm sure this was on news. All right, let's go to the 4-hour chart just to be sure. Yeah, this was definitely news here. And we can probably even tighten up this level here. All right, so these are the two levels. I'm going to zoom out back to the daily chart. Two levels of interest within this monthly sellers level. The first one is going to be at the 146, and then roughly the 151. However, I will be looking at this pair over the next, say, several weeks to see if we get some type of reversal. Let's mark off this. This is a level here that if price was to retreat, you might get a pullback before a potential break. Let's see what happens. We have, I believe, U.S. jobs report, non-farm payrolls for June, later this end of the week. Not sure what else is coming out news this week, but it's going to be a light week overall. It is 4th of July week. Light trading day today, tomorrow holiday, and then you have a couple more days in the week. But volume should pick up again next week. So this might be a light week for Forex as well. Nevertheless, I'm going to be paying attention to this pair and looking for that reversal, especially if Japan intervenes. That's going to be very bullish for the yen, which is going to put downward pressure on this USD Japanese yen pair. Thanks for watching. Subscribe. Please like the video.